And so I think it's really interesting that you said that this is a seller's market. Like, that is crazy to think right now. All right, welcome everybody. Episode number 2 of Mr. Money Channel. Today I have with me Realtor Eric Smith out of El Paso, Texas. We're going to be talking about the real estate market, and he's going to give you a market snapshot of what's going on in the area here. Mainly, and if you know El Paso, the west side of El Paso and El Paso in general, the things that are happening nationally in the market that are affecting housing, sales, and mortgage. We'll be trying to touch on all those things. We met just on a simple phone call. I was actually house hunting, looking to add to my portfolio, and spoke with Eric. He's got great knowledge on the market, and we kicked it off pretty well. And so we're going to be doing this episode together. So welcome, Eric.
Thank you for having me. It's a day-to-day conversation, and real estate is something that really does affect everybody at all levels. There's no one in this market, being that we're now in early June, making our way through the COVID situation. Everyone's curious, whether you're a homeowner, buyer, seller, renter, any of those things. Everyone's wondering where they're going to live, how that's going to look like now and in the future. Are they at risk and things like that? So,
no, the biggest thing that's been coming up is we can look at this two ways, right? From a client perspective, somebody needing a home for themselves and their family. And then, somebody trying to get into the investment game, maybe trying to get a second home, or an investor, who is looking to gain more property because they think a market collapse is coming. And then I've also seen where investors are, they're actually putting their properties on the market. The biggest question I'm getting is, why aren't housing prices moving, right? Like, everybody's waiting for this big opportunity to jump on house, like pricing collapse. And why do you think housing prices are maintaining?
Very important question. All you really want to know when you have a piece of real estate is its appreciation rate, up or down. No, you're completely right. The values have not gone down; they've gone up. They've gone up year to date. They've gone up year over month to month now. We've obviously gone through May, April, and March, counting backwards. The local MLS board is going to be releasing. It may not be for a few more days. Today's June 3rd. They're not going to be releasing May's stats for a few more days. So, Dan, we may have to do a follow-up on this, because we'll be able to see March, April, and May together. I've got some line graphs and just some general metrics that I'll go over through our conversation here. But the number one fundamental thing that I was able to confirm by May 10th, looking and so forth, was the decrease in inventory. Went down. The 79912 market is a majority of West El Paso. Anyone that doesn't know, it's a pretty big zip code, and it's got a little bit of everything. Affordable, from 150,000 below price points all the way up to, 500,000. But your everyday 3 and 4 bedroom homes can be found here. There's 2 majors, lots of shopping and that type of thing. It's a neighborhood I live in and grow up in and do a lot of business in as well. The very dramatic drop in listings by 38%. I'll say that again, 38% year over year for a normal April. Basically, what I've come to a conclusion is the 79912 zip code does have a higher average price point than most zip codes in El Paso. The average 219. We've got a 16.08% appreciation from April 2019, which the average price point was $215,000. It's now $249,000 as of April 20. So I'm curious to see May go up. What's happened here is we've become by definition, Dan, a seller's market because of that low inventory. Buyer credentials and qualifications, to my knowledge, and if you can speak to it, have not changed for the negative knowledge. So as long as you've got your same fundamental debts and incomes and things like that, that would have gotten you qualified 6 months ago. That's still happening. Of course, we know it's the same story with interest rates being super, super healthy, and money's affordable in that regard. So I've said seller's market because it is what it is. When you've got a buyer pool Since I mentioned that the average price point is about 250,000, I'm going to go from the 200 April of 2019, and that price point, there was 82 listings. There's 51. There was 51 in April in the 200 to 250,000 price point. That's a 38% drop. So you got to imagine, are there more than 51 active buyers out there for that price point? The answer is definitely yes. It's created a multiple offer situation, an aggressive market that I haven't seen or experienced since 2010. So 2013 to 14 was a year where I really realized, price appreciation and multiple offer stuff. Things kind of tapered out as new construction things started to really ramp up post recession and things like that.
Yeah, definitely. I mean, you brought up some really great stuff, and it's something I've been talking to my partners with about, and that's how the El Paso market is really this micro environment compared to Dallas, Fort Worth, or Houston, and it's really unique in that it's kind of a shelter from recession, and it's a reason why my wife and I love getting investment property here. Just like you said, everybody's waiting for prices to drop. There's so many fewer listings, but the big percentage of fewer listings is fueling competition amongst buyers, right? So it's like we have less to go after. And when I called you, we found that one property had a sign on there, and you're like, yeah, that thing sold in like 2 days. And it's like, wow, okay, so now we're getting into this mode, kind of like a property we have in Dallas that, our real estate agent had to reach out to us and say, hey, this one is not on the market yet. They're about to list it, but I can get you in sooner. And so you need to get those contacts like that. You need to get agents who are, have a really broad network and are able to get you in the deal sooner. Because once they go public and everybody is able to touch them, see them, then it's that multiple bid war you talked about, which is really interesting because that's something we saw pre-Great Recession, right? We saw that from 2004 to 2007-ish, right? The prices of homes were just ballooned, right? And of course, they were giving loans away back then. And I think now it's a much stronger mathematics behind it, right? The banking behind it is stronger because everybody is still qualified. We can go into talking about COVID and why, there's 30 million people out of work. But I've always said, I think the initial onslaught of all those people out of work, a lot of people who couldn't afford to purchase a home in the first place. And I'm not saying that there aren't people in there that weren't affected negatively, and I feel sorry for them and everything. But I think the vast majority of restaurant workers, can't go out and buy a $300,000 home. The people who are working right now are the ones who can't afford to buy as well. And I think everybody, especially with the onslaught of information technology like YouTube and Facebook and everything, and everybody giving away basic information on how to invest, they're looking for opportunities, right? And they're looking for ways to, hey, can we sell our house and get into another house at a bigger equity position? And I think everybody's in that mindset of it's time to double down because we have the ability to. And I'll switch it over to something you touched on, and that is, if you were able to qualify for a house 6 to 12 months ago, those same parameters are still in place. Just a few of the programs were suspended, like some renovation loans, or kind of fix and flip type loans were put on pause. But your normal FHA, conventional, first time home buying, second home, investment property, they all still exist. And I'm a mortgage lender, and it's the same thing. It's not like we have to jump through fire hoops. What is happening is that underwriting from whether it be, our bank or the lender we're using, they're backlogged, right? They are backed up and they're taking a long time. So what used to close in 2 weeks, 30 days is now 45. For a second there, it was going to 60-day closings, right? But now that's coming back. They're finally opening up, and they're giving out the money, and they're looking at a couple things. And I'll put this out there for any buyer. What they're looking at now is they're going to verify your information closer and closer to closing, right? Including your employment. They're going to do like a same day phone call in some aspects I've heard. Definitely, within that 3 day window that you're going to close. So they're going to make sure everything you put in front of them, you're still on time, even if you came out of forbearance. And there's some people who went into forbearance and they're trying to get out. You can get out and still buy a house. You just got to show 3 months of payments. So you're not out of the game. So that's happening. They're making sure you got your employment, and they're still making sure that income's coming in. But it's definitely the buying opportunity still there, but it's a fight, right? It's a big competition. And so I think it's really interesting that you said that this is a seller's market. Like, that is crazy to think right now.
What ended up happening then, the summer buying season turned out to be a 4 or 5 month period starting in March or April. So the people that already had some kind of move in their life, relocation, whether it was governmental, military, or corporate, some kind of managerial position, none of that has slowed down. I have day-to-day conversations just with mid to high-level professionals. There's not a skip in their beat. And that buying season, by the way, I'll expand it as of June 3rd, 2020. Instead of assuming that it's going to just kind of taper off in August or September like it organically would with the school season, I think we're going to have this year round. The market's going to be way more malleable in a good way. Transparency. I think more creative levels of finance, more creative levels of just transaction things are going to happen for the better. There's always been this teetering for at least 5 years on what the next generation of the consumer is going to be with real estate, from all things from lending, of course, to just the representation of the property, the involvement, the knowledge. What do people in and how quick? And at the end of the day, we know this. I can tell you, they just want to know the basics, which means that they want decent communication, customer service from a lender, from a realtor, or what, even if it's an online platform. We keep using Uber as like the Uber of this. It's still not at that level where people can go through even a digital transaction, iBroker, eBroker, whatever, and it's super seamless. It's all being worked out. And I believe I've spoken to a number of colleagues, to be honest, over that have been in residential sales or lending in combination for at least 20 years. They've said this: they've made more money in down markets than they do in a normal market. Because at the end of the day, Dan, people are still going to need a resource. When someone's making a decision as a consumer that does this only once every 7, 10, 15 years, at the end of the day, they don't want to bank it on an app. So reaching out to someone that can give you a menu of options, because believe it or not, everybody's situation is different. I don't care if they're the next military guy that makes the same amount. They've got credit things that need to be addressed and this and that. I don't know where I'm going with this topic other than to say that it's a healthy market. In reading headlines, it's misleading to a degree when you're reading just the headline or maybe the interpretation, the description of the blog or whatever it may be itself, whether it's Forbes.com, because they're showing negative numbers. They show minus 39.5%. But what that is that's a reduction. I just named a number, Dan, 39.5% reduction of days on market. It's gone from 96 to 58. So, but when you put 3 or 4 negative, things are down. Yes, they are down, but certain people are not really using critical thinking. And the conversation is naturally going to come from the public right now, Dan, that the market is challenged and suffering. But yet, if you're engaging in the market right now as a buyer or seller, either one, it's a much different experience. It's very active, and you need to be on your toes, and you need good representation right now.
You touched on a couple great things, and that is, yeah, most buyers are not, right? You don't buy a home every year, or multiple a year, unless you're maybe a really good investor. But as a client just looking to get into a bigger house, let's say your family's grown, it's hard to catch up. And not a lot has changed, but people have that perception that, oh, wow, buying a house is hard. A lot of things have changed. And, being in an app, yeah, it makes it easy, but it's also scary, right? Are you missing something? And so I think it's really important for clients, if you're out there, you're in a buying mode, get yourself with a realtor like Eric, get on the phone with a loan originator. not just a big bank. You want somebody local in your town, preferably in your state. You got to get with somebody who knows the market, knows what they're doing, and that can help you, give you that peace of mind buying that property. That's super important. And you touched on something there. The number of days that a house is on the market, you know, dropping significantly here in El Paso is really incredible. But like I said in the beginning, El Paso's that steady, that slow turtle, that steady race. It doesn't spike your property up, and it doesn't let it drop through the root, through the ground. It's really unique in that the main thing El Paso comes down to is inventory, right? And I know everybody's going to be saying that all over the country. There's an inventory problem, but you know, this is where you got to get with somebody who knows their stuff, and can get you those properties. Like you yourself, right? I mean, I think you're sending me 2-3 properties every day, and that just reminder, hey, I need to look. Drive by the neighborhood. Do I even like the neighborhood? Everyone you've sent me.
Someone else is going to want, and it's not going to particularly last. But the price point, something important I was able to this was before us meeting here, Dan, is Austin, Texas, comparable in population, not comparable in a lot of demographics, but a lot of people is very attractive. El Paso's average price per square foot, average sale price is another thing that's very attractive about West El Paso. Not to market El Paso so much, but it's on corporate levels, high military levels at El Paso and West Texas, southern New Mexico is actually becoming a household destination because of that price point. For your 2,000 square foot house in Austin, Texas, it's actually about a $360,000 to $380,000 price point. Here in El Paso, it's 225, 240 for the same similar quality 3 or 4 bedroom house. It's so unique in this conversation versus any other market that I really know of. Phoenix, Albuquerque, East Coast, West Coast, for a normal city of 500,000 and more, normal American city, we have the lowest price point, and people are always continuously surprised. And so unfortunately that family on qualification in some markets, their purchase power is always going to be a bit challenged by, what's that entry level. If the entry and average price point is 300 and anything thousand, that's a higher price. That's $100,000 more than it is in El Paso or smaller markets. People just need to be aware of, how far their dollar can go if they're going to spend that where they're living, and just, I guess, keep a close eye on what industry is going to happen. I mean, I think we're absolutely going to revamp nationwide with, manufacturing, with services. Everything's going to make a comeback. Everything, this was is it official? Has this been labeled the Great Pause? What are we calling this period of time that we're in? Because we had the Great Recession, we had things like that. Do we know what this is being called? The Great Pause. I've heard it.
And so it is just that would be a really good word for it. The Great Pause, because economically, I mean, the stock market's not paying attention to what's going on with the coronavirus, right? It did it for about 2 weeks. I think everybody who was going to jump in the game did. I think the big money's still sitting on the sidelines, waiting to see what Powell says from the Fed and what Trump has to tweet. I'm not going to get into the politics of anything. And those numbers that you bring up in the markets of Austin, yeah, definitely. You go to Austin, great town, great culture, unique there and everything. And people love living there. But to me, that's kind of like California. People love living there. But is a $1,500 house for $500,000 worth it when you can work from home anywhere in the world? And so you want your dollars to go longer, whether it's El Paso, North Carolina, Illinois, where you can definitely get more bang for your buck.
Now and moving forward is for consumers out there. Obviously, if they're watching the video and to this point, is they need to ask themselves, where do they want to live next? Market's healthy. The country, there's issues, but they're not affecting residential homes. They're not affecting the stock market you mentioned. So we could probably name a couple other major bullet points there.
No, that's it. Hey, Eric, I want to really thank you for your time. We spent about about less than an hour. The setup, we'll get it dialed in. I really appreciate you coming on. We'll keep the conversation going. And again, everybody looking out there, if you're a buyer, whether personal, for your family, second home, or investor, right now is a great time to buy. It is a seller's market in some areas, but I will tell you, there's some people who, what they call, got pinched in the wedge. They're going to be looking to drop, they got to get rid of their property. And that's usually investors who have over leveraged and they got a tenant who can't pay. Maybe this COVID thing bit them and they got to get out fast. They probably put a lot of money into that thing. And they have a lot of room to give it away low. So I will give you this advice. I'm sure Eric would too. Look, understand your area, your price per square foot, so that those opportunities jump out at you and you can take advantage for the benefit of your family. And remember, taking advantage doesn't mean you're taking advantage of somebody else. You might be helping them. You might be helping them from going into bankruptcy, from, getting, changing their life upside down. You purchasing that house might be the best thing, win-win situation for a lot of people. So don't be afraid to take advantage. I hope this video helps you. We'll come out with another one really soon. Eric, again, super thanks to you. Thank you very much.
Anytime, Dan.